So you've seen the headlines, right? Bitcoin hits some crazy new price, or you hear about someone who made a fortune overnight, and you're kind of left there thinking, what on earth is cryptocurrency, really? Well, if that's you, you're in exactly the right place. Let's dive in and finally clear up what this whole new world of digital money is all about.
All right, so to really get why something like cryptocurrency was even invented in the first place, we actually have to start with the money we use every single day. You know, the cash, the bank transfers, it all seems to work just fine, doesn't it? But if you look just a little bit closer, you start to see that the system has some serious cracks.
I mean, just think about this for a second. We can send an email, a photo, even a high-def video to anyone on the other side of the planet, and it gets there instantly for free. So how come sending your own hard-earned money to family abroad feels like it's stuck in the Stone Age? That's a pretty fair question.
Well, that frustration really comes down to a few key things. Those international transfers can take days, and you get hit with these painful fees along the way. Why? It's because of all the middlemen. Banks, governments, payment processors, they all stand in the middle, they all take a cut, and they're the ones in control. And hey, need to send money on a Sunday? Good luck with that. The bank's closed. And this entire system, it's all built on us trusting these big institutions. Institutions that, as we all saw back in the 2008 financial crisis, can and do fail.
In that set of problems, that is exactly what cryptocurrency was built to fix. It's a totally different way of thinking about money. It's money designed from the ground up for the world we live in now, a world built on the internet.
So here's the absolute core of it. Cryptocurrency is digital money that doesn't need a central authority. There's no big bank approving things, no government in the middle. It's a true peer-to-peer system. It's for sending value directly from me to you, no questions asked.
You know, the timing of its creation was no accident at all. Bitcoin, which was the very first crypto, was released in 2009 by this mysterious person or group known only as Satoshi Nakamoto. This was literally right after the financial crisis, a time when people's trust in the whole banking system was at an all-time low. Since then, of course, the idea has just exploded. Now there are thousands of other cryptocurrencies, often called altcoins.
Okay, so this is usually the part where things can start to sound a little complicated, a little techy. But stick with me, because I promise the basic idea is actually brilliant in its simplicity. Let's pull back the curtain and see how this whole engine actually runs.
The technology behind it all is called the blockchain. And honestly, the best way to picture it is just as a giant public spreadsheet. That's it. Every time someone sends money, a new row gets added to the sheet. But here's the magic trick. This spreadsheet isn't sitting on one bank server. It's copied and shared across thousands of computers all over the world. So instead of trusting a company, the trust is literally built into the system itself.
So when you send some crypto, you're basically just shouting your request out to this whole global network. All those computers work together to check that you actually have the money to send. Once they agree, your transaction gets bundled up with a bunch of others into a new block, and that block gets locked onto the chain forever. And that's it, it's done. No waiting for the bank to open, no 3-day clearing periods. The transfer is complete.
Now, to actually use this network, you need something called a digital wallet. You can think of it as your own personal bank account for your crypto. But, and this is a huge but, there's one massive difference. You, and only you, are in complete control.
Your wallet is secured by 2 different keys. Your public key is kind of like your bank account number. It's safe to share it with people so they can send you funds. But your private key is everything. It's your password, your signature, your PIN code, all rolled into one. And I cannot stress this enough. You must never, ever share it with anyone. Because if someone else gets it, they have your money. And if you lose it, your money is gone forever. There's no forgot my password button. There's no customer service line to call. You are your own bank.
Okay, so now that we've got a handle on how it all works, let's get real. Let's talk about what it's actually like to use this stuff. Because, like any powerful new technology, there are some absolutely incredible upsides and some really, really serious risks. On the plus side, the advantages are pretty amazing, and they're direct answers to all those problems we started with. It's global, it's fast. We're talking international payments that can settle in minutes, not days. The network itself is incredibly secure, which makes it super difficult to hack. But maybe the biggest thing is user control. No bank can freeze your account. No company can block your payment. It's your money, period. But we have to be honest about the other side of the coin. The price volatility is just insane. It's totally normal for prices to swing 10–20% in a single day. You still can't go buy your groceries or pay your rent with it in most places. And that learning curve for managing your own wallet and keys securely, it is steep. And let's face it, crypto has a bit of a reputation problem because of its use in illegal stuff, and that casts a shadow over everything.
So we've got this weird situation, right? It's fast and powerful, but it's also super volatile and risky. So with all that in mind, why on earth are so many people talking about it, not as a technology, but as the next huge investment?
Well, when you boil it all down, it comes from a few places. First, there's the undeniable potential for insane returns. Then you've got the true believers, the people who think this technology will fundamentally change finance forever. For others, it's just a smart way to diversify their investments. And let's be real, a huge part of it is just good old-fashioned FOMO, the fear of missing out.
And yeah, this number is why that FOMO is so powerful. Bitcoin literally started out being worth pennies, and at its peak, a single coin was worth almost $70,000. That's the kind of crazy growth that fuels all the hype and gets all the attention.
But after seeing a number like that, I need you to hear this next part loud and clear. This is the single most important piece of advice anyone can give you about crypto. It's a world of amazing innovation for sure, but it is also a world of wild speculation. You have to treat any money you put in here like a trip to Vegas. Only bet with money you are 100% prepared to lose. So if you do decide you want to explore this world, please go in with your eyes wide open. Do your own research, because for every one serious project, there are 100 scams. Think long-term, because trying to play the daily price swings will drive you crazy. Diversify, and please be on the lookout for scams. The space is an absolute minefield for newcomers.
So where does all this leave us? Is crypto really the future of finance? Or is it just a massive, fascinating bubble that'll one day pop? Well, the honest answer is, nobody really knows for sure. The blockchain technology underneath it all is already changing other industries. But whether cryptocurrency itself becomes the money of the future or just a really interesting footnote in history, well, that's a story that's still being written. But now you're ready to understand it as it unfolds.